Boys. Too many boys.
The first battle will turn them into men.
In the old days, I lived at least 6 months with my men before going into action. I knew them, they knew me. These are strangers. Too many boys.
They have never tasted defeat.
Do they know what is expected of them?
They are ready to die for you. Can you ask more?
What's up, guys? It's a new trading day and a new trading week. I personally hope you earned much and had fun in the last 7 days. The previous week was a quiet week. Not much has happened, and the market has a generally upbeat sentiment as the worries of inflation have subsided much. Though the gold price still rode on the inflation hype and went to a local maximum in more than the recent half years. On the crypto side, the market seems stabilized with the panic cooling down. However, for those who bought at near the all-time high, Bitcoin and Ethereum are still a long way from home. Shitcoins are not doing well in the meantime. So guess we will have to see if our boy Alan would do anything rash again. Back to the equities front, there are few notable pieces this week, though the boring market is still the thing. President Joe Biden, although viewed as weak and old by many, is still in power to reshape the leadership of the US Central Bank by replacing any of them. Now it is under explicit pressure from some Democrats to dump quotes. No, not this one. This one. The vice chair of the Fed. So what do they have against him though? They claim that quotes is not straight enough towards the bank and is one of the main pusher of deregulation of banks under Trump, and now is not doing enough to prevent systematic risks that could arise from them. May not be worth much, but my 2 cents on this was that the regulation saved the US from the stagnation of the 1970s. And it ushered in the period of prosperity under Reagan to Clinton. That time period, boomers find so many good jobs that they rub it in our face. And the US is in crisis now. So is it really a good idea to increase regulation at this moment? Think, Joe, think! This is not the way it is. But in the short run, this is not the game changer, as it is clearly a bipartisan consensus on the dovish fiscal policies. The money printer is still not throttling, and it is still very much the consensus. So I think for the bank, it may get regulated sometimes later, but this will not be the main focus right now. The main focus on the Fed is still its fiscal policy. Another news of the week is that China's banking regulator has asked lenders to stop selling financial products linked to commodity futures to individual investors. According to a Reuters report citing 3 unidentified people, which turns out eventually this is not true. The China Banking and Insurance Regulatory Commissions later comment that this is not true. I think we all get where this concern was coming from, especially recalling the negative price of oil last year during the first wave of COVID, which bust so many margin positions of Chinese banks in derivatives. Also, right now, the inflation bubble that China is trying so hard to fight, even resort to price control of certain commodities like iron. But the Chinese seems not yet to make this decision. If this stays unturned, we can treat this as a vote of confidence in the economy as a whole by China. So right now, we can see our portfolio that we have bought NXPI before, and MKTA is already gaining traction to earn 8%, and right now Netflix is yet to break through upward, but I say things are going quite well for us right now. Oh, and a reminder to all of you, Monday is Memorial Day and the stock market is closed. Let's just have a moment with your family and be less anxious. That's all we have this week. Please like, comment, share, and subscribe. I will see you next time. Bye bye!